सही निवेश, समय और संयम. Markets were vulnerable to FPI flows because they were a dominant player in the market. When we look at the valuations, large caps are a good place to be in.
Okay.
If you are a long-term investor, you can put money, as we discussed, in the flexi cap.
This war scenario will have definitely some kind of impact, whether short term or a long term.
Growth, inflation dynamics. When we compare ourselves with the rest of the world, I think we are in a good shape.
If mutual fund is knowledge, is ETF wisdom?
India is a stock picker's paradise over the next several years. The good part about Indian markets is that a lot of these things that have happened in the world, that you have opportunity to invest in active funds, in the passive fund. I think we are the best in class product bouquet. We have, in fact, one of the longest track record. So you want rest of your portfolio to do well in a stable environment.
Agreed.
But something goes wrong, it's like an insurance policy.
Very good evening, and to all our investors, a very happy Diwali. Last year, same time, we just met, and I am so glad to welcome you again, Navneet Munot. He doesn't need an introduction. We are so happy to have you here again, Navneet. It's a pleasure always to be there talking with you. Candidly, we did speak last year also in detail. In continuation to that, I think I would call it a season 2. Season 2 itself is a testimony that season 1 did well. I think the number of investors, I can proudly say, last Diwali were more than 1 lakh, and it's still people are watching it, what exactly we discussed. So here again, Navneet, happy to have you here again, once again. The frequently asked questions, I'm not going to ask, be prepared. So it's going to be a rapid fire, and I'm going to keep it as interesting as possible for the benefit of our investors. Just to touch upon what exactly we discussed last year, a year back. On the hindsight, everything looks really nice. Maybe you predicted well. I know in the market, people look at every successful CIO and fund managers and CEOs as astrologers, but it doesn't happen that way.
Really.
Not really at all. But you did say few finer points, which I think the investors definitely benefited. You said that please do break in the do not panic. Even at that time, the valuation was overheated. The FIs are pulling it out. The same question remained the same, maybe in a different panic tone. The tone is different, but the question remained the same a year back, exactly 12 months back. During the eve of Diwali, we had this discussion, Navneet, if you could recall. People asked the similar questions. What you categorically told them is, please do come through the SIP route. Please do a staggered investments. Please diversify. You very clearly said. You did speak about gold. The gold is not going to lose its shine. That's exactly the word you used. And today, all those words have come true. And I mean, there's not a single ounce of factors which you really portrayed to the retail investors. I'm sure definitely they benefited. The flexi cap funds, you suggested, you asked them to stay invested in top 100. You asked them to avoid few thematic schemes, and you ask them to invest regularly. Everything has done so well. Now here comes the following question. Now that last year was so right, Navneet, how are you going to make it right this year again? You are victim of your own success, as they say. That now this year I'm not going to ask you questions. So I'm going to make my life very, very easy this time. I just have one question to start with, and then I'm going to leave it to you to talk to our investors freely, and then follow up current trends, what exactly one needs to be cautious about. All the questions you are aware of, Navneet, I'll touch upon them. But 3 schemes I think I really wanted to touch upon that has significant importance today, that I thought we should discuss that first. 30 Diwalis, it's not 1 or 2 Diwalis. These 3 schemes have almost seen 30 Diwalis. One is HDFC Top 100, which has crossed almost 28 years.
Yeah.
And HDFC BAF, which has seen 3 decades, 30 years. I think I was just entering into college, maybe BAF got launched. That gives me good old memories. And FlexiCap, close to 29 years.
Almost, yeah.
And the other interesting thing is, Navneet, I'm sure you always advise the investors not to keep track of NAVs, but that becomes the answer sheet when the teacher gives...
I'm not saying they should not keep track of NAVs, but
I know.
I mean, if you buy a house or if you invest in gold or somewhere, you normally don't look at the price every single day,
Absolutely.
right? I mean, of your house or anything.
Absolutely.
Just because a stock price or let's say an NAV is available doesn't mean that every day you keep calculating your
Yes.
return. This is for long term, and
Absolutely.
you are right that these schemes have been around for 28,
30
29,
years
30
almost,
years
yeah.
now. Those who are disciplined to do that,
Yeah.
and I'm sure that over the next 25 years, as India is in Amritkal, we will become a Viksit Bharat, we will become a developed country.
Absolutely.
The economy will be much bigger, corporate sector will be much bigger, and India is one of those few countries, unlike many others, where the economy continues to grow at a very good pace. You have a corporate sector which is converting that growth into their revenues and profits. You have a capital market which basically reflects the profits and revenues that corporates have generated, and a mutual fund industry where even with few hundred or few thousand rupees, you can get the similar returns. I mean, it's an extraordinary thing. Very few economies in the world have done that. So we feel very proud. And before that, I mean, wish you and entire HDFC Securities family and all our investors and viewers a very happy Diwali.
Thank you.
There have been many challenges in last 1 year. I mean, if you look at the geopolitical risk, I think our heart goes to people who are struggling, whether in Middle East or whether in heart of the Europe, given the wars that have been going on. There are many other challenges in various other parts of the world in terms of the economic challenges they are facing. But we are very blessed that we are in a country where the overall political environment, the social environment, the economic environment has been very good. And we are, like, as people say, that we are at the right time, at the right place. I think we are all very lucky to be at the right time, at the right place.
So despite the charts, despite all the growth stories, you say that luck is also an important thing. I'm going to catch you upon that as well.
When it was asked to Warren Buffett, there was a secret of your success. He said, I just came out of the right womb in the right place.
Yeah.
Had he born in some other countries,
yes.
let's say in some of the other continents,
I agree.
where those economies haven't done well, even if he was the most intelligent there, he wouldn't have made the same amount of money. Had he born maybe 2 decades back, he might be impacted by the Second World War. Life could have been very different. So I think it really makes a difference, honestly. You go back in history of the world, that the time you are living in, that makes a lot of difference. We are all so lucky to be in India at the right time.
I'm going to accept that as pearls of wisdom, Navneet. One who is going to admit, despite seeing all the charts and knowing all the balance sheets at the back of your hand, that is, we need to definitely contribute that also to the success. And you're right.
You have the gratitude. I mean, when you look at some of these headlines, and it's a very crude truth, but it's a truth that, I mean, you see a death, it's painful. You see some, and it's very painful. And you see large number of that, it becomes just a statistics. You just see a number that, this, missile attack or this attack, and that many died. And it's so painful. I mean, look at several parts of the world where what they are going through.
Yes.
And how lucky we are. So we need to have the gratitude.
Yes, gratitude is something which we all need to have. And markets has been kind, and investors have been kind to the market. Market has been kind to the investors, I would call. I think you nailed it. Did you also notice, Navneet, last time when we discussed in a couple of other interviews as well in the past, we have discussed that you also said that one shouldn't keep track of NAV on a daily basis, but I know that it's our scheme. Rather, I wouldn't say that it's HDFC family. We should be proud to acknowledge the fact that HDFC Flexi Cap, I don't know how many would have noticed this. Somebody would have invested 29 years back. It is 1912. Today, while we are speaking, that's the NAV. So people talk that PE investments, we made 100 times, 200 times. Somebody had been patient, and somebody had been invested 1 lakh rupees. It is growing close to 2,000 times in the next 30 years. That's what we call it as a consistent performance. Health and wealth both seem to be extremely difficult to achieve because of the factor, one simple factor, consistency.
I always say this, there is only one formula of wealth creation.
Yes.
And that formula is, so that everybody remembers, I keep repeating it, but still, STP is the one, of course, the systematic transfer plan, but I'm referring to another STP, which is sound investment plus time plus patience. सही निवेश, समय और संयम. अगर इन तीनों में से एक को भी निकाल दिया तो wealth creation नहीं होगा, because you need to make a sound investment, you need to give it sufficient time, and you need to have patience with it, because markets will go up and down because of many factors. But as you were giving the example of the flexi cap, or let's say the funds that have been around for a very long time, investors who've been able to reap the benefit are the ones who had that discipline.
Yeah,
Who had that, आपने सही word use किया, consistency.
definitely.
Where the consistency of being with them.
Being with them. I know we are from the mutual fund industry. We need to also say that, the past performance doesn't guarantee you the
Absolutely.
same.
So again, as I said that those returns were in a certain environment. But what it shows is that what is the power of compounding? That if you remain disciplined, keep doing it month after month. And in this period, so in last 30 years, Sensex would have moved from, let's say, 4,000 to, let's say, 21,000 in January 8.
Yeah.
Then it fell like almost 60% within a year. Then it again went up. There have been like many calendar years where returns would have been like negligible, or calendar years where they were like negative also. But if you kept investing, if you kept the patience, you have done so well.
Absolutely, Navneet. I think also we found that retail investors a decade back, if we have to take 10 Diwalis back, we used to ask this question to all the CIOs and CEOs of mutual fund industry, what would happen if FIIs are going to, not very long time, even 10 years back, we used to be so worried about the FIIs inflows, and we used to daily track how much they are buying, how much they are selling and all that. Does it really matter? My extended question to that would be also, have we really concerned about the movements of FIIs? However, the extended question would be we know that the kind of inflows we get through SIPs, the retail participation in the financial inclusion, should we also be worried about China, Navneet? The way they are shaping up, is their economy going to be the way we have been hearing news is that FIIs are removing the money here and then trying to invest there. What do you think is happening around on that side?
So for first on the FPI versus the domestic flows. So
yeah,
historically our markets were vulnerable to FPI flows because they were a dominant player in the market. They used to move the market, and if you remember in olden days, every day people will just check how much FPIs have bought or sold, because that will dictate how the market would be on that day and then the next day. Now it has changed, and that's the power of retail investor. That's the retail resilience that we have seen in last couple of years. Now today, MFI has released the data, and if I've seen it right, 24,500 crores of SIP last month. Now you extrapolate that number into 12, we're talking of almost like 3 lakh crores.
Yeah.
I mean, we're talking about like $35 billion or so of money which is going to come through systematic investment plan, and there are like 10 crore accounts, which means it's less than 2,500 rupees per account in SIP. And $35 billion, I don't know whether there was any year in which foreigners invested that kind of money. And now we are talking about this money coming in every month.
And we're not adding the compounding growth here.
Exactly, yeah. And you add some of the other sources, investors investing directly, PFO investing into ETFs, so on and so forth. So the power of retail money, what it has done is it has reduced the volatility in the market. Because earlier we were like highly dependent on the foreign flows, now we are not. Does it mean that we shouldn't care about them? No, I think India needs a lot more investments. It's good that foreigners also invest in India. You will also see many companies raising money. We are already seeing many companies raising money from capital market. That number will go up. And foreign investors, by and large, last 30 years have been net large invested into India. Because they've always liked the long-term macro story of India. They always like the stable environment in India. They always like the growth potential of India as a top-down investor. They always like the bottom-up opportunity. India has a large universe of very high-quality companies, focus on capital efficiency, focus on governance, focus on high-quality disclosure, so on and so forth. So they've always liked India as a stock picker. Somebody may have liked as a top-down opportunity. Now the third element gets added, that because of the domestic money flow, if the market volatility is less and liquidity is higher in the market, then it should give more confidence to a global asset allocator to put more money into India. So in the long run, I expect more money will come, but percentage ownership of Indian investors will keep going up.
Okay, so if I've understood right, and to break it much more simply for the retail investors, it can be better, or it can be that sugar added to the milk. The FIIs can be, but we don't need to really be concerned when you have such
Exactly,
kind of
yeah.
domestic inflows.
So earlier at 3, 4, 5, I mean, recently we saw like 2, 3, $4 billion of selling, and you didn't see like as much impact on the market as you would have seen with $5 billion of selling till few years back. Yeah,
Got it.
market has become like the depth is a lot more in the market now.
A couple of more questions towards because we're just approaching to the end of our conversation. I know we can keep it for an hours and hours with you around, but I'll have to filter those questions. Frequently asked question by my investors. They keep asking. The question has, as I told you in the beginning of the conversation, only Navneet, the question remains the same. The tone and the situation has changed. 10 years back, people always ask us, sir, abhi market kidhar jayega? The first question, whether you bazaar kya lagta hai? It varies from Kashmir to Kanyakumari, whether it is Gujarati or Tamil, Hindi, Bengali, the word remains the same, bazaar abhi kidhar jayega. So it is going to be incomplete, but the only difference here is, now I'm going to ask you slightly rephrase that famous question, bazaar kidhar jane wala hai, is the mid cap, small cap, whatever rally we can call, we had that huge 2 years of what we saw. Will that continue? And do you really see that investors' money, the September data shows that, the investors started to take now at last large cap seriously and recognize that here is another asset class you need to look at it. Is that the time that has come for the investors to look at the large cap as a space, or what is that mid cap and small cap as you feel that in the current trends?
So of course over the last couple of weeks we have seen some bit of correction in the mid and small cap space. Market has come down a little bit from the all-time high, but there has been slightly I would say a bigger correction in the mid and small cap. In fact, if you look beyond the index, even in the mid and small cap, maybe some pockets where a froth was building, I think some of that froth has kind of like got corrected, which is a good sign to be very honest. What I hear from our fund managers is that on a relative basis, when we look at the valuations, large caps are a good place to be in.
Okay.
If you are a long-term investor, you can put money, as we discussed, in the flexi cap, where the fund manager has the ability to move across the market cap curve. They wherever they see value, whether it's in large, mid or small cap, they have the flexibility to invest. But otherwise, some of the larger companies, purely on a valuation basis, have higher margin of safety than some of the mid and small cap at the index level.
So now slightly the global perspective, we are in a world where dependent on each other. The neighbors are crying and we can't be happy. So that's a hard truth and bitter truth. So what's happening around last year, if you recall, you touched upon very sensibly, and it's a sensitive issue that, the Russia-Ukraine war is now 2 years old, more than 2 years old. Now we have the recent Middle East tension happening between Israel and Iran. Now, is war going to be really impactful to these global stock markets? Yes, we had a correction on and off. Do you think that this war scenario will have definitely some kind of impact, whether short term or a long term? Where do you see that particular position? Of course, the famous US elections, can you just touch upon that as well, Navneet?
So, I mean, the global geopolitics, global geoeconomics, I think we earlier discussed. I think I repeat that line several times. It may sound like a cliche, but I mean, the only thing I can say with certainty is continuity of uncertainty. We live in a highly uncertain environment. We are in a world where, I mean, geopolitically there are there are realignments. Some of these risks that you highlighted about the geopolitical risk are for real. This time, relative to, let's say, some of the earlier events, it did not impact the crude oil prices as much. Maybe the demand supply dynamics are very, very different. Won't go too deep into it. But because that is one of the risks that as India, we always look at from a macro perspective. We are a large importer of crude oil. And if prices go up substantially, it has an impact on us. So relatively, because the crude oil prices haven't gone up, it didn't impact us. But in some or the other manner, if the global economy is growing at a lesser pace, if there are geopolitical concerns, whether through the trade channel, through the capital flows channel, through some channel, it will have an impact on India to some bit. But it is substantially lesser than the previous cycles, simply because the growth potential in the economy now that the consumption has been coming back, the investment cycle is reviving. Government has focused a lot in last 10 years on the macro stability. With the regulators, they have focused on the financial stability. The balance sheet of corporate sector and the banking sector are in the best ever shape in a very, very long period of time.
That's
If
music
you
to
look at
ears.
the foreign exchange reserves of like $700 billion, if you look at the current account deficit of like nearing 1% or so. I think overall, whether it's the external balance sheet, whether it's the corporate balance sheet, the banking sector balance sheet, I think the overall growth inflation dynamics, when we compare ourselves with the rest of the world, I think we are in a good shape. But something really goes wrong in some part of the world, in some manner it will have impact on us, but not to the magnitude that, let's say, in 2013 we found ourselves in a much worse situation than, let's say, when a COVID crisis happened.
Okay, that's also really interesting. I think you said it right. The geopolitical tensions, we need to really look upon it, but there are certain things which are beyond our control. So I think inconsistency is going to be something very consistent in the future, and we need to live upon and sail upon those tough times. And the last but not the least, I think ETF. You have been a great ambassador of that particular space as well. If mutual fund is knowledge, is ETF wisdom? Can we put it that way? Or is ETF has still got into the retail way? Should we, is the retail investors have started to knock really the doors of ETF? Can you want to
No, I think we talked about the long-term track record of FlexiCap fund, or let's say top 100 fund or balanced fund, a very, very long period of time. I think in India, fund managers like ours have delivered great value to the investors over a long period of time. India is a stock picker's paradise over the next several years, decades. I think I would bet on them. At the same time, I think we are at the very early stage of financialization of savings, and there will be many instruments that investors can use to participate in the market. Somebody just want to start with a Nifty ETF, or let's say Nifty index fund, just to buy top 50 stocks, they can do it. But somebody wants to do better than the market and want to bet on, let's say, something like a top 100 for the risk that they are taking over a period of time. But the good part about Indian markets is that a lot of these things that have happened in the world, that you have opportunity to invest in active funds, in the passive fund, both in the index and ETF format, and now you will have alternatives also. So every market will flourish in India. The most important thing is investors are under allocated in risk assets. Investors are under allocated.
As a distributor, I agree that.
Exactly. In whether in equities, whether in long bonds, or those who have allocated enough to them to, let's say, to even test the private market. I think there are a lot of opportunities in India, and a growing economy like ours. I think all segments.
I heard. Maybe I hear what you are not trying to convey as well. Not the many ETF guys are going to be happy to hear that.
No, I think we are the best in class product bouquet. We have, in fact, one of the longest track record.
Yes,
I think our index funds have.
So there's room for both. I can hear
20 years back, and some of our index funds are like one of the largest and the oldest, and the product platform is great. So for us, I think all the products are on the platform, and it's up to the wealth managers
our retail, our relationship managers will definitely
to advise and create the right portfolio for the investor.
Definitely. So coming from the background where I come from, Indian from South, the last most important question is, every time my mom, when I visit Chennai for Diwali, asks one simple question, I fail to, she proves to be continuously right. She says that my gold has performed better than you, Sampath, your value advice.
I think if you compare with some of the funds that you talked about, funds would have done far better.
So I'll definitely.
There will be cycles. Let me make it very clear.
No, because Dhanteras, I'll tell you the reason why I'm asking that.
And that's why, let's say, if you buy a multi-asset fund, you will get exposure to fixed income, you'll get exposure to gold, you'll get exposure to equities, and then the remaining 70% a fund manager will allocate depending on our views on various asset classes. And we always advocate asset allocation, right? We always talk about having diversification across asset classes. Gold has a role to play. Last couple of years it has done well for a variety of reasons. And maybe over a longer period there is a need for investors to have a small allocation. But keep one thing in mind. I mean, it's an asset class which doesn't earn, like, I mean, on bonds you
Agreed.
get interest income. On equity, companies are producing earnings which will reflect in the stock price, or they are giving dividends in your hand. But in case of gold, I think it depends on what the next buyer will buy.
So you know the story about gold better than anyone else, Navneet. It's
But
not.
I've always advocated that
yeah.
a small allocation to
Definitely
gold
it
as
should
an
be
asset
there,
class. I think fixed income, equity. I think all of them have a role to play.
We overdo that. We overdo that.
We
Other
overdo-
side, so yeah, we
all-
overdo that rather.
exactly,
Yeah, we will
yeah,
try
all
to.
the
I'll
time.
try to. We'll continue to educate
In
the
fact, I
investors.
always give this example of gold as in like, an insurance policy when you're buying the car. In fact, you don't want the gold to do well, because it will do well when, let's say, there is a flare up in geopolitical risk. It will do well when, let's say, people get worried about fiat currencies. If central banks are printing too much of money and creating hyperinflation in those situations. And those are not the situations you really want. So you want rest of your portfolio to do well in a stable environment.
Agreed.
And but something goes wrong, it's like an insurance policy. So I mean, if you're buying a car, you don't want like to claim the insurance, right? You just buy the insurance, but God forbid something happens,
Then you definitely
want
might
that
use it.
insurance
Yeah.
to back. That's how the gold should be thought about in the portfolio.
So Navneet, thank you so much for that insight. I'm sure this is going to benefit our investors for this Diwali and for the future days as well. Last year also you did a similar discussion we had. I'm sure the investors got benefited, trust me. And we are very clear, very sure that those advices what you give are going to reach to the investors, and they're going to take it and plan their future appropriately to create one more year of wealth creation. I wish everyone who is listening to this
many years or decades of wealth creation.
wealth creation for sure, and we'll have the next Diwali again with much more wealth creation examples, and I hope flexi caps and top 200s and other schemes as well doing phenomenally well as a group. We'll do. Thank you very much for having us, and it's a pleasure meeting you. Thank you so much.
Thank you. Wish you all a very happy Diwali.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.